chart education example on Facebook. FB, max list stock. We key on max list stocks. At the time, this was also, and it still is, a 40-45. You can say, what does that mean? Last quarter's earnings were up 40% or higher, and or the last 2 quarters sales were up on average 45%. These are market leaders. You combine these two variables, max list and 40-45, you might have yourself a winner. Now let's look at the chart pattern. The stock runs up, it pulls back to the 50-day. That's the green line. And it pulls back on steadily decreasing volume. We're looking for action. We always look for action near key moving averages. The 50-day, the 200-day, the 20-day, or the 8-period exponential, which is the yellow. Right here, it lifted off the 50-day. Volume was okay, but not great. Was it good enough to buy some? A person could buy some with a very tight stop. It was lifting off a key moving average, and it's a max list stock. The stock walked up the 8-period moving average. It's a trend. We look for simple trends. Right here, it gapped up and closed at its midpoint. It's still riding the 8-period. Whenever I get a gap up of this magnitude, if I'm in it, I'm going to take a little bit. The stock comes down to the 8-day and bounces off the 8-day again. Let's advance this a couple of days and see what happens. This day, it basically opens at the same price. It runs up and closes down on a slight pickup in volume. That's a red flag. Just says to watch out. The next day it comes down and it bounces off the 8-day. It's still hanging above the 8-day. We've sold some into strength so we can weather this kind of action. But then finally on this day, it loses the 8-day on a big pickup in volume. If you're a faster trader, many people will take some, losing the 8-period moving average. I just want to share this with you. Each of us has to find what fits our parameters and comfort level. I love the 20-day. I love the 8-day exponential. It's a great trigger.